$2,500 was my original investment. Worked out of my parents' basement. And then year 5 turned a profit. We went from 10 million sales almost down to 0. We lost $3 million in the first 2 years of the transition. If you don't do anything, your business won't be more valuable. You're still going to be working in the business, not on the business. People doing the right work just makes everything else easier.
Jim, thank you for being here today. Today's guest, Jim Schultz, is someone who didn't build a business for a quick flip. You founded Applied Educational Systems in 1987 and led it for 36 years before exiting in 2022. On your own terms, I've seen you say multiple times, so I'm excited to dig into that. Along the way, AES earned 5 consecutive spots on the Inc. 5000 list. It's a big achievement, and went through at least one major reinvention of the business model in the early 2000s. Not just in product, but in how you sold it and how you scaled it, right? Jim joined Vistage back in 2003 to be in a CEO peer group, and he was in that group for 2 decades, which means his leadership evolution, which we'll talk about today, but if you're on this journey as a founder and a CEO, you must go through a leadership evolution, right? But it ran in parallel with your company's growth, as they are wont to do. And today, you coach business owners in central Pennsylvania. You chair your own Vistage group, and you focus on not just the strategy, but on the whole person behind the business. And I would say, when I follow along with your LinkedIn posts, I do love how you talk not just to the business specifics, but also the internal journey and the family components of it as well. So I'm excited to unpack what actually changed in you and hear your journey with AES. Thank you.
Well, thank you. I'm excited to be here, and I hope I can share some valuable content for people.
All right, so you founded AES in 1987, and you exited in 2022 after 36 years. Tell me about AES's evolution under your leadership.
It was a journey. So originally started the company when I was 24. So it was a long journey in 36 years. When we first started, it was interesting because I was fairly young, 24, and I didn't know anything. It was a family in the sense of I have brothers and sisters who are engineers, so we developed products, and at the time it was simulators for career and technical education throughout the U.S. and schools. So we had to develop the product first. So, of course, it took 3 to 6 months to develop the product, so no sales during that period. And, my wife and I, newly married, I'm not really bringing much of an income in at that point. And I went into an industry, education, that has a long lead time in terms of sales, 6 to 12 months. So we did not turn a profit for the first, I believe it was like 4 years.
Were you bootstrapping this?
Bootstrapping, $2,500 was my original investment. Worked out of my parents' basement. My brothers and sisters, a few other relatives, actually put some money in too. And then my parents actually gave a loan that really was the sustainable part in the first 5 years. And then year 5 turned a profit, and then slowly but surely continued to build the business up. 5 employees to 15 to 30, and by I'd say 15th year, we had really hit some momentum. Nice stable business, nice cash flow, 15% net operating profit, a good place in our market, high quality product, good customer, NPS, really worked well. And then I decided to blow the business up after 23 years. So up to that point, we had sold a turnkey solution to career and technical schools, primarily high schools in the U.S. And generally, these turnkey solutions involved software, which we developed, e-learn curriculum, which we developed, tabletop activities. We packaged it all together. So we decided to take our e-learning curriculum and port that and put it all online. And the SaaS subscription recurring model had worked well already in many other niches. No one really had attempted it in our narrow vertical niche of career and technical education. Most of it was textbooks, curriculum, hardware that was being sold to schools. So 2011, we launched, and in the first 18 months, and this we did on purpose, we went from 10 million sales almost down to zero.
I remember
we
hearing about
stopped-
this.
We stopped selling the other
terrifying.
product, and a lot of people really disagreed with that, especially my sales team and especially independent sales reps that represented us, and everyone kind of fled the boat.
Can I pause you for 1 second? I have two questions here. What forced you to make this pivot? Like, what were the forcing factors that you made it say this is worth more than continuing the course?
Great question. So I've gotten that question a lot. Two things. First, I think it was the right thing to do for teachers and administrators, for customers. I believe when you do a subscription service, they can drop it at any time. You have to add value. Before, we were selling a turnkey solution, $100,000, $200,000 upfront. I thought we were losing our way a little bit in giving the best value to a customer and keeping us at the highest level in terms of that.
Yeah.
And I know it sounds a little bit like people listen to that explanation and people go, what? That doesn't really make sense. But that was in my mind, like, that was the right thing to do for the customer. And then the second thing is I had learned at least enough, a little bit at that point, that understanding recurring model 100% was a much better business model and a model that could essentially get a higher valuation long-term in the company. So it was a long-term play because even at that point, it was really clear the subscription model, if you did it well and your net revenue retention was over 100% and your NPS scores were really high, that you could build a business that was going to grow every year and be much more valuable based on EBITDA than a business that really were, large turnkey solutions, but there really wasn't any recurring revenue.
Right. Yeah, that's a lot scarier from an acquisition perspective to a buyer. Did you get this idea through your Vistage group?
No, the Vistage group wasn't even really happy about it.
Oh, really? Tell me about that.
We had, I essentially, I don't know if they really had any say in it. I came in and I said, well, here's the business model. And by that time, I had been in 7, 8 years. People were pretty familiar with it. And I said, we're going to blow the business up and we're going to go to this subscription model. And, people, I would say I had one great piece of advice I processed because I knew losing that money, we had a real problem with cash flow. So we reinvested everything that we had saved up to that point. My wife and I, we emptied all our retirement, put the money in.
You were committed. You felt compelled that this was,
Absolutely, because we knew we were going to lose. We lost $3 million in the first 2 years of this transition, and we went from 40 employees down to 5 employees. We had to sell. We had a second house that we were lucky enough to get in the South Jersey beach. We had to sell that to get money. The bank put us in workout.
Okay, I have to dig in here for a minute because the level of conviction that you had to have felt. I have this business at this point, it's like 20 years seasoned business.
23 years.
23 years seasoned business. You have been making money. You've built a good thing. You've got the golden goose.
It was a very nice steady lifestyle business. We were really fortunate. We could pull income, out of it. The family got to do a lot of things. A lot of employees, we did a model where 30% of the profits went back to the employees in the form of a 401k, individual profit, individual bonuses, and then company-wide profit sharing. I mean, it was a good lifestyle business.
Do you remember when this idea first got planted for this recurring revenue model? Like, where were you? Do you remember what kicked off this journey?
Well, actually, I had my lead software developer kind of worked on this skunk works in the background. And he kind of came and said, I've been doing this thing. I've ported over everything. It operates up in the web. I think this is a viable thing. So he kind of had the genesis of the idea, Ken Richard, on this. Hey, here's something we can do. Where it really ran into problems is, the sales team had their golden goose, the turnkey solution. The sales team sold through independent sales reps who really wanted to go hunt elephants. They were like, oh, we'll just sell this on the side. And to me, that wasn't going to work. Well, that was like dipping our toe into it.
Put me in your mindset, right? Like to a founder or CEO who's listening to this, and they have some idea that they've considered, the seed has been planted. Walk me through that journey of that seed coming to fruition, because there had to be moments where you brought this up to your wife, to your family, and they were like, no way, right? And then maybe you sat on it for a bit, like, or no, you were just, let's do it. Damn the torpedoes.
Because at one point, I just decided, and I don't know, I think it was part of the frustration that it was a mixed signal. We had like this product line, and then we had this online subscription. I said, it's not going to work for us to kind of build this up and kind of try to maintain this. It's the one thing. Remove that, focus on this one thing. This one thing is going to be really hard. We're probably going to lose most of our employees. We're going to start with no customers. The independent sales reps will probably be not interested in it. Oh, and by the way, we have a real big problem because we have to generate leads. And at that point, we were generating 0 leads because we never really had done marketing. It was all driven through these independent sales reps.
Why not sell off that first business and use the proceeds to start the second business?
That probably would have been, in retrospect, there's lots of mistakes.
All right.
And people go, here's what I did. I did another startup within an existing company. I can't explain it any other way. Like, went from 10 million, I think in 2011 we did like $300,000 in sales. And that was really only leftovers. So, 2012, it really wasn't much better. We were absorbing those large losses because, people were leaving, and I wanted to do right. So everyone that left, ended up getting another job. If they didn't, we were giving a severance, nice severance package for the time they'd been. And these were seasoned people that had been with AS a long time. I wanted to do right by everyone and do it the right way, and that was probably more on the loss side. So then 2013, we were down to like the 5 people, really minimal expenses, and then we're okay, how are we going to grow this business?
How long did it take you to get back to the revenue that you had at your peak with the previous model?
That was interesting because we never really got back to the revenue peak, but we far exceeded the gross profit.
Okay, tell me more. So you went down this path. You said, we're doing it. We're cutting, damn the torpedoes. We're going full speed ahead. And took some losses a little bit. But then you started to rebuild. So then what happened?
I would say we put a framework in place at the time. It was called they ask, you answer. And it was just a basic thing of we decided we wanted to be the most trusted source in our vertical market.
Okay.
So they ask, you answer is just the principle of trying to answer every question a customer, a buyer, a prospect asks in the unbiased, most educational, objective way.
Okay.
So we started blogging like every day. And, you know, you do that every day, you do it a year, 2 years, 3 years. Over a 5-year period, we went from 0 leads to generating around 27,000 leads a year, top of the funnel.
Mm-hmm.
And then we put some systems in place, you know, scoring, coming down, marketing qualified lead, sales qualified lead. And then we started to build out our sales team. And I would say there were the really big thing, and maybe you'll get to this, is really when I decided how I was going to rebuild the leadership team.
Mm-hmm.
So I had lots of mistakes before.
Because you were 5 people in, you were down to 5 people, and then you rebuilt up to.
We were 37 or so when we actually sold.
So you can't be involved in everything, and you don't want to be.
Correct.
And then you exited. So that's a nice tie-in. Let's talk about the moment. Were you always building to sell? Or was there a moment where you thought after the rebuild, you thought, oh, this could really be a sellable business? When did that happen?
I always thought, like at some point, like when I started AS, we were going to sell.
Mm-hmm.
And even when we were younger, we talked about this long-term vision. So when I say younger, like late 20s, into our 30s, like by the time I'm in my 50s, I would like to have freedom and options, spend a lot of time with our kids.
Yep. You have 5.
We have 5.
Oh.
And, you know, hopefully we were thinking, you know, they were going to have kids, and we had got married fairly at a young age, so we were going to be grandparents probably, you know, late 50s, early 60s. That was we wanted the freedom to do whatever at that point.
Okay.
So that was just, so obviously going through that period of making that transition in the business, that really wasn't a mindset, except for the one thought that I already placed, going to a subscription business, 100% recurring revenue, we knew the valuation would be at a much higher level. So when it became serious was around 2016, when I was thinking about, okay, what's the leadership team going to look like, and how am I going to get the best people possible? And then number 2, I got together and got my advisors together, specifically an M&A lawyer who was with the firm that I was working with, to say, how can we map this out, and what are some important things we should consider?
So that was 2016-ish?
Yeah, so it was about 6 years till it actually happened.
Great. So if you're listening to this, you need to know it's not something you think about just 1 year out. If you want the best exit. Okay, so let's talk more about that kind of time illusion that founders think that they have, right? This is future me's problem. I am not going to deal with this right now. I have other more pressing things to do. You mentioned 2016, you kind of started this. Was there ever an unexpected event that compressed the timeline? Or do you feel like it naturally progressed for you on the timeline you thought it would? That's 6 years.
Yeah, for us, it did work out, because by 2017, we had laid out a 5-year plan.
Okay.
And a lot of times you write a plan, you get punched in the nose, and it doesn't work that way. We were fortunate. Now, we absolutely had ups and downs during those 5 years, but the end result is the deal closed in October of 2022.
Which was about 5 years.
Yeah, about 5 years. And we try to be pretty intentional about that timeline, and we try to really pull it out, and then even at some point try to integrate it into conversations we were having with the leadership team and some things we were doing in the business.
When you laid out that 5-year plan, I'm curious, I'm sure you've referenced it, in your work with other clients. What did you have on it?
That's a great question. and it got modified as we went along,
Yeah.
as we learned new things. So the first thing is, from an M&A perspective, what are the important levers that make a company more valuable? So M&A lawyers can be really valuable because they can put you in touch with people, and you can just have conversations, and you can be upfront, like, hey, we're not ready yet. We're trying to understand more about the marketplace, or more about what are some levers. And the one lever that we heard was, you got to have a leadership team that is strong, has depth, and is ready. And the other part of the conversation was, well, here's some different ways transactions can look. You can stay, you can do the 3-year, and I actually had
Golden handcuffs.
and I had made a decision pretty early on, like 2017, 18. I was not going to stay.
Okay.
I would help in the transition, I'd help in the integration, but I wanted to have a leadership team that was strong enough that they were going to run with it.
Okay.
So that was important from my perspective.
So you met with an M&A attorney. How did you get that? How'd you get that connection?
So we just used a local firm in Lancaster that had that work available. So this is where I'd probably say pause. The one thing in talking to now other business owners is, you really need to pick and take your time and get the best, team of advisors. For example, don't pick your lawyer just because it's a lawyer you've been with. Like, pick an M&A lawyer that's, all they do, or they have a team, they work on deals. As a matter of fact, maybe go interview 3 or 4 M&A attorneys and pick the one that you think is the best fit for you. So we kind of defaulted to the firm we were using.
Yeah. What questions would you ask to a founder out there who's like, okay, I'm going to go, my 5-year journey is about to begin, or my 6-year journey. I'd like to go find an M&A advisor to go through this with me. What would you say to ask in the interview with them?
So I would say, first of all, you kind of have to know your value. You have to have a range of the valuation you have in mind for your company.
Okay.
Because that's going to depend. Like, if the valuation is 4x EBITDA, and right now you're at $1 million, so say the transaction would be $4 million, those questions should be specific around that range versus like 25 million. So the first thing is, how many deals have you closed in the last 12 months? What is the biggest deal you closed? What's the smallest deal you closed? What's the average of those deals? In your experience, tell me the 3 things that you try to provide insight and value for. That's a common theme that owners mess up on. That would be a start.
That's a good one. Yeah.
And there's like 2 or 3 other really good ones. And I hey, I made a mistake. We just said, oh, you do M&A work too? Oh, we'll just take you. And now thinking about it, I would always advise, especially if it's a bigger, once you start getting 10 million and above on the transaction size, you really need someone that has specific experience, who does it all the time in that range. And so often, I just see that not happening.
And I would expect, like most professionals, they expect you to interview them, right? Is this something that founders should be concerned about, is being upfront and saying, we're looking for an M&A attorney, we would like to interview you for the role?
Yes.
Like,
I have somebody, I have a client right now who's going through that process.
Okay, great. So you talked to your M&A attorney, and they gave you some advice. Number 1, strong leadership team, which we're going to dig into in a minute. What other advice did they give you to put on that 5-year roadmap?
So one of the things that became pretty evident is the structure of our company, the way we had shares, subchapter S, C, like there's some considerations. So we got some advice and we made some changes. And those changes were based on the idea of to track the best leadership team. In the interview process, we were going to talk about equity. So we created 2 voting chairs.
Got it. That's great.
And those, like, I never would have known that, and that's where they kind of set that structure up to lead into to allow us to make these offers to people we were interviewing on what the equity situation looked like, and
great
then
idea.
make it really easy. Maybe a lot of owners are that I wasn't even thinking about that at that point.
Right. Well, and even to get some advice on, as you build your leadership team, what is reasonable
Correct.
to offer them.
Right.
It's not too much, not too little, right?
So here's one big mistake that I made, and I tell people the tax situation in any transaction is really important. You really need to have a tax lawyer, I think, as part of your team, especially if the transaction is going to net a couple $1 million or more to the owner, to the family. That was one thing we missed, and it kind of really hurt us. At the end, we were being very reactive, and that's typically something an accounting firm, unless it's a bigger firm, like out of Philadelphia, New York, Chicago, regional firms don't really have that specialization or that skill set.
Will a wealth advisor help you do some tax preparation? Because those strategies should get set up a couple years in advance, right? There are things you should be doing now to set you up.
I think, like, we talk about that 5-year timeline. Like, those are the first things that really should be happening, because they can happen as you still work work on the business and work on those things. Those are things that you shouldn't really do a year or 6 months out, because then you're focused on the
deal.
transaction, due diligence, the data room. So the 5-year timeline, I would spend the first 6 to 12 months getting the advisory team looking at tax efficiency. So when I say advisory team, I think accountants, MA lawyer, tax lawyer, financial advisor, and get them all in the same room together as you talk about, hey, here's what I want to do, not individual conversations, in my opinion.
And have them come up with a strategy that works for all parties.
Correct.
That's a great idea. Well, that's a really good idea. If an offer had shown up, so you put this 5 years plan together, which to me, you're already ahead of the curve, which realistically, from listening to your story, 2011, when you made this revenue shift, was actually when you started thinking about selling the business.
Yes.
So you were already putting yourself in a position to optimize. And then now we're getting into the nitty gritty, right? 5 years out. What if an offer had come up, let's say 2 years into that 5-year plan? Do you think you would have been as prepared to exit? Would it have been as materially good?
And that's the thing that I think owners are all going to have to face at one point. So you ask any owner, especially as they get older, what do they always say? Oh, I have lots of people knocking on my door. And at that point,
That won't be so hard. That'll be easy.
And at that point, we had people knocking on the door. Absolutely could have done that. That is a path. The difference is, like, it would have been like 4 to 1. So let's just pick 2 numbers, 5 million versus 20 million.
That extra 3 million, that extra 3 years really was absolutely necessary to lock in and make it happen.
Because again, you have important levers. Leadership team is one. Try to diversify. Don't have customer concentration. Really try to clean up your balance sheet. Really try to clean up your P&L, and that goes to all owners. Wink, we all do it. We pull money out of the business, so you got to at least get organized on all the add-ons that you're taking out of the business that show up as an expense. Not that you have to stop them. You just really want to get all those questions answered, because you're going to have to.
They're going to go through it with a fine-tooth
Yes,
comb.
yes.
So you may as well get ahead of the story.
those are things in addition to, two other, I think, other levers as far as, total market availability. Hey, what's NPS scores? What's the retention with the current customers? What's the recurring revenue? Because all businesses have recurring revenue. So those are all things that either can drive value up or depress value.
I want to dig into your leadership team, right? You had posted earlier about recruiting is the CEO's job, and that's the field that I'm in, right? I use behavioral analytics to help people build great teams. And I look at it, a lot of times people will come to me and they'll say, I was at a conference. I'm like, how'd you hear about us? We're mostly word of mouth. How'd you hear about us? Oh, I was at a conference. Somebody, another CEO I was sitting next to said they used you. Really excited to work with you. I'm going to have my HR person call you. And I'm like, stop right there. Like, human capital development to me has 4 parts. There's the strategy, there's the recruitment, there's the development, and then there's career path. There's the engagement, there's the team development, communication, engagement. How do we get more effective communication, less silos? And then there's the personal development. What's the career path for these people? But it all has to start with the strategy. And you said you got that advice. I have to build a strong leadership team. So dig into the strategy in your mind that you held the responsibility.
So I think for me, there are a couple major factors. So one is just reps and practice, and then you have reflection. So early in my career as a founder and business owner, I made lots of mistakes. You don't really know it when you're there, but hiring, it was. Actually, I just wrote about it today. Like my very first supervisor hire was, we hit $1 million in sales, and I went out to go interview some people. I had no job description, didn't really even know the questions I was asking, and I had this person start. They left after 4 days. And I look back and that's embarrassing. And
they probably said something like, this job isn't what I thought it was going to be.
That's
right?
it. Yeah.
This isn't what you told me I was going to be doing. You're like, well, I didn't actually think really hard about what you were going to be doing.
Hold on for a second. And we forget, as founders or business owners, we bring a certain passion into the business. They don't really care. We're not there to sell people on our, people go, well, I'm here to sell people on my company. I believe when we go to interview people, we want to give them the clearest picture of what the expectations are in the role, to really great detail in what a week looks like, what a month looks like, what the quarter looks like, what the vision of the company is. Not, oh, we're going to be great. We are great. People
we're going to be great. Figure it out. I need you to work in the warehouse. Yes. Could you just come in and do that?
And I believe you should tell all the warts, because every company's imperfect. And if we sit here and just put on the greatest face, here's the challenges we have. And maybe even some of the challenges are tied to that role that you're interviewing for. So the first thing that happened, defining the work in the role. And not a job description, because I think job descriptions are BS. Defining the work in the role is, I would say, 5 major bullets. What are the most important things this person should do? Not outcomes like, oh, I'm going to increase, you need to increase sales 7%, or you need to lower gross margin by 3%. Those are outcomes.
Right.
Work in the role is the work, the thinking, the actions that they're responsible for in their role.
We align so well here. I always say, I want you to write down daily, weekly, monthly, and as needed for this role. What are every day they come in and they sit down at their desk, what are the things they're going to have to do every day, weekly, monthly? And people don't usually get that granular. But until you can understand the role, and then I'll ask questions like, same thing, 3 to 5 bullet points. Where do they spend most of their time? So we just did this with a company that owns a bunch of bars and restaurants, and they were talking about general managers. And even just driving consensus among the leaders of what the general manager actually does. What is the one thing that general manager does that nobody else on the team can do, right? And, the level of conversation that I think before we went into it, everybody would have said, oh, it's a general manager, just hire them. They manage a restaurant. But then I said, what do they do? And they're like, well, they have to do logistics and planning, right? Okay, well, what percent of their time do they spend in that, right? So 100% I agree all with this. So you taking it back to your journey, you knew you needed to build a strong leadership team. What did that look like?
So the first thing is the people that I wanted to go after were probably outside of our compensation range. So we were offering equity.
Okay.
So had an equity part of that, and that was part of the interview conversation. And we did go and hire an outside firm because just the targeting we wanted to do, we knew we were going to go after people who were employed elsewhere. So I would say the equity piece was important in our framework because it allowed us to go after people that really, when they came to AES, they were, at least in the very short term, they knew what the end result could be with the equity piece. You know, down to like we tried to talk about it in terms of like if we can get to this in ARR, annual recurring revenue, and we can get this in EBITDA. Here's the current valuations for a SaaS company, and here's your percent. Here's what it would mean. Like put it down on paper and actually show them. Then show them the ranges. So the people we were able to get were coming in where their annual compensation probably took a hit, maybe the first year. Now, the second, third year, you know, they got to the level and then beyond it. But it worked out. The risks that they took worked well. Because when we went to sell, the three of them all had equity in the business.
And can you tell me about them? Like what specific roles? You start building out this leadership team and you say, I need this role who can do this role who can do this.
So clearly, we needed a director of sales.
Okay.
We, at that point, had one sales, but this is 2016, 17, 18 timeframe. That director of sales had to build out and grow a sales team.
Okay.
And had to build out not only a BDR inside team, but also a successful outside team.
Okay.
So that was kind of one of the roles. The second role was director of curriculum product development. Someone who was going to be responsible because we were going to invest heavily and continue to do more curriculum e-learning development because we wanted to build out our library. As we build out our library, more students come on. We were priced per student.
Okay.
So that was a very big role. And we had, at that time, I think 4 or 5 people on the team. They really didn't have a manager. So that creates issues there. And then the last is we need somebody really strong on, I would say, the revenue operation side, meaning we wanted to take our CRM at the time, which was Salesforce. We were using HubSpot. We were using Intech.
Okay.
We wanted somebody that was really going to be able to tie all those together and have kind of a record that we would all trust and data that we would all trust, and it would drive all our business decisions. So that person had to have some technical ability, but the biggest is to put systems, process, but actually have the operational excellence to go and deliver on it and then refine and adapt as we got better. So that was very helpful because when we went into the selling process, that was actually one lever of what we had done with all those integrating them, creating workflows, making it really easy for salespeople to have success, what we had done in integration of the marketing and sales team. These were all competencies that we had developed at a pretty high level for a small company that were pretty attractive to bigger companies in the market.
It's interesting because obviously I hear this often. We needed a competent sales leader to grow revenue, and we needed a strong leader. But what I just heard you say is we invested in someone to simplify our tech stack, to like clean up and simplify our tech stack so that when buyers came looking, it wasn't like, oh, and then I have to go over here and look in this and look at that. It was clean and easy.
And that was their role. You know, it wasn't like wink, wink. Oh, you can do the tech stack, 5% of your time over here as needed. It was the role and the work that they did. And it was probably all three were instrumental. We would have not gotten there without the three of them. But that one, I think, turned heads when we went into the actual process of selling, when we actually talked to PE firms or we talked to strategic firms, and then the actual buyer ended up really using some of the things that we put in place
Right.
in their company, which was larger.
Which your tech companies, that makes sense. But honestly, when I look at across the gamut of my clients, that's something that would make all of them more sellable. Instead of the band-aiding hodgepodge tech solutions where it's like, well, we've been using this CRM for 20 years and then we added on this and this and this. Like, no, we actually took time to clean house so that when you walk in, you feel great.
Yes. When we got to the data room and those things, it just flowed so much more easily. And then I see on the flip side, people who aren't ready, and then when they get to due diligence in the data room,
It takes so much time.
What it does is it stretches out the deal, which then puts the deal at risk.
And potentially slows down their business, which then puts the deal at risk because they're not maintaining the same numbers.
You pull that thread and it comes apart.
Did you get it right? Those three leaders, did you get it right the first time around?
Fortunately, yes, we did.
What do you attribute that to?
Really knowing that these were three key positions, being really intentional about the interview process, work in the role, setting up scorecards, doing assessments, behavioral questions, testing the people to make sure they were capable of the work and that they had the right stratum level and the ability to handle uncertainty and risk. Just really taking it almost to the point of like doing it slowly. Because each one was probably, took us 3 to 4 months. And we did this over a period of probably 36 months to fill out that team. So it was 16, 18, 19.
That tracks so well with some of the conversations I've had with clients are about hiring key leaders. And I always tell them, focus on one key leader a year instead of trying to fix everything all at once, because then you can really, to your point, spend the time to be so intentional about it. And when that person onboards, they run, you've spent the time training them and now you can focus on the next one. So thank you for validating what I was thinking.
Less is more focus. And I know we say those words and we throw them around, but I've made that mistake of not doing that lots of times in my career. And now I see other business owners just fall into the trap all the time of not doing that.
How much do you think it cost you? Like, I'm imagining, I'm putting myself in the audience's shoes, right? And I have a business. I've proven success in this business. I've been toying with the idea of selling, and maybe some life event happens that's created urgency. Or my margins are not big enough that I feel comfortable taking the time to slow down and invest. How much do you think it costs you to stick it out 5 years to invest in these other people, these key leaders? Like, I want to know from 2017 Jim's perspective, if you're like, okay, I'm going to budget this money to make this successful. Do you have an idea of what that amount was?
How much we actually budgeted on those key hires? And things? I mean, I would say we definitely spent probably a couple $1 million combined
over 5 years.
Over 5 years to try to do the right things around leadership, the right things around the tech stack, the right things around certain levers that we knew were really important. Like, there's always the risk.
Yeah.
But at the end of the day, the valuation we got, and we can certainly talk about that.
Yeah. Was
like
loads, like you said, 4x higher.
I was just saying, if we had sold in 2017, but like that in particular investment, it was 10, 20, 30x. And it,
Right. So you invest 2 million into this person on the tech stack and you get, 60 million or whatever on the back end. What would your advice be to a founder who's in that position right there who knows that they need to invest in the right leaders to run the systems inside their company that is afraid to pull the trigger on the cost?
what's the reason you're afraid?
From your experience working with CEOs in similar positions, what do you see? What's the reason they're afraid usually?
It's the story that I think we tell ourselves in our head that really isn't the reality out in the world. Oh, it's not going to work. Oh, what if I hire this person that really may? Well, there is no 100% guarantee in anything. If you don't do anything, your business won't be more valuable. You're still going to be working in the business, not on the business. Like the difference, and I probably people hearing this, some can identify it so quick. Like when I had those 3 people on board, the leadership team, they were the best leadership team I ever had, and they made everything else so much easier.
Mm-hmm.
And it's kind of the question, what's the one thing that an owner can do that makes everything else easier? And I would say getting the right leadership team on board, right seats, right people doing the right work, just makes everything else easier. The hesitation always is the story that we tell in our heads. And, well, that seems really risky, that seems uncertain, but in reality, the bigger risk and the bigger uncertainty, I think, is not doing anything, because then what happens, and I'm sure you talk to people like this, I talk to owners every day, that's my life now, someone who gets older, late 60s, in their 70s, and there really is, it's a dead end. And it's unfortunate because that opportunity has already passed them by.
And I guess maybe more too is looking at it from the perspective of it's an opportunity, not an expense. If they can wrap their heads around what's the opportunity of the right sales leader? What's the opportunity? Like if you can quantify that on paper, right?
And just to add back, I would say one thing, there's never a perfect time to hire those people. Like when I hired the first one, I couldn't really afford them.
Mm-hmm.
But you kind of do it because you think it's an opportunity. If you always look at hiring leadership people in a reactive or it costs me money, and you hear people, it's going to cost me 120 or 150 or 200. Actually, it doesn't really cost you 200. It costs you 200 over 12 months.
Yeah.
So every month it costs you this.
Well, and also what's the cost of inaction? And I feel like people don't quantify that enough, even to the ones who say, oh, I want to sell in 10 years, right? I've had this conversation with 3 different clients in the past month. And I was like, I've got a podcast for you coming out. And they're like, oh, this is, future me's problem. And I'm like, but the cost of inaction, every year you delay addressing one of these high level issues, building out your team or the right leadership, like building out your M&A team or your leadership team or the cash, setting yourself up a strong cash position. Like there is a cost to that. And it's typically like millions of dollars cost when we're talking in business. So, I think that's where you have to get to. And you don't have to do it all at once. Like you set down a 5-year plan. Just what's the one step you're committed to making?
Yep. And I think you added, like when you think about a leadership team, and if it's 2 people or 3 people, like that's 4 years. So you have to plan that out.
Right.
And typically, you're really focused on that. I wouldn't be doing other things as far as the timeline. So it really was kind of like, hey, the first 6 months, get the advisory team. Okay. And really then the focus, 3 years was like leadership team, because that was going to be my big level. And then, the last 2 years is kind of now you're entering the process. How do you want to do it? Do you want to be a competitive process? Do you want to use a broker? Depending on your size, do you want to use an investment banker if you're big enough? Kind of stretches out. another year, 18 months, depending what direction you go.
Yeah. I'm going to wrap this up. I've got one more question for you, and then open time to share any last thoughts you want to make sure that the audience definitely hears. If you had to quantify one, what would be one regret that you have during the exit process?
Lots of mistakes, but I think the one regret was not getting the advisory team on the front end right and getting a few specialized people that ended up, costing us some money in the end.
Mm-hmm.
So, and one was like the tax lawyer, specialist, not the M&A lawyer, not your accountant, but someone who really is going to bring high value. Sometimes you have to go to Philadelphia or New York, to really find people. And you know what? They're worth their weight in gold, even though they might charge, $1,000 an hour.
Mm-hmm.
That's one thing I think we talk about a whole lot, because it was just a frustrating thing at the end that we didn't have that specialization.
That's a good one. What else would you like to know, kind of to summarize, for someone who's considering exiting in the future, in the near future, and I'm going to put that as 10 years or less. That is the near future, listeners, 10 years or less. It's going to go faster than you think. Kind of summarize your advice for them, and then if there's anything else that you think they should think about.
Well, I think it starts the basis. What do they want? What are they looking for? This is, my opinion and what I believe, but also what I see, and was the case with me. Our business typically is our biggest investment.
Mm-hmm.
Isn't that important enough where we want to be really intentional about the plan of actually what's going to happen? Because there is going to be a time when we won't do the work on the business, or we won't work in the business. So you better start thinking about it at some point. Earlier the better. So I would say the question is like, what do you really want? And I think most business owners do think about like freedom.
Agreed.
And, being able to do things, whatever, with a family, hobbies, interests, get back to the community. There might not be a moment where you go in for an hour, 2 hours, and you have it all figured out. That takes some noodling, and that takes some time. So I'd say that's kind of the first. But once you have that, that tends to make a lot of other things easier. And then we talked about the timeline. I just think you got to think of it as the biggest thing you're going to do for your family, the biggest thing you're going to do for your employees and your customers. Don't do it as an event, a project, a transaction. It's a 5-year plan. And just like lay out the major steps of that plan and just make sure that you're making progress. Now, you can go, and there's lots of really good experts. There's lots of things you can go and find out. You can go and talk to a ton of people. But that 5-year, I just see so many business owners treat it like an event, a transaction, a project.
Right.
And even succession planning. Succession planning is the same thing. You just don't have that event that happens. But it's probably you're still doing the 5-year plan, or maybe even longer if you're doing career development. So I know that was a little bit, up here, but I think you have to decide those things. There's individual tactics you need to do during each of the 5 years to make sure it goes well. And we didn't even talk about, when it gets into the last year, which is usually the hardest lift, but there's options, what way you can go, and it just depends on how many hours you want to put in. You could spend a lot of time on whatever deal option you go down. For me, probably the last 12 months, I probably spent 750 hours to 1,000 hours just working with investment banker, working with private equity, making presentations, working with, possible strategic buyers, going through the, working with my leadership team.
And right, and if you haven't set up a team that can run the business, that's
You
actually
get-
a great point.
You get overwhelmed. It's not 40 hours.
Yeah.
And you sign a few papers, shake some hands, and you go have lunch.
Yeah, you need to be preparing in your 5-year strategy that last year you are not going to be in the business.
Correct. And that goes back to the leadership team. It goes back to what you're building. The better you can do those things, the more valuable your company is. And I don't know a business owner who doesn't really want value out of their company. And I would say that the one thing that we haven't really talked about is know what your valuation, what your range of your business is, and be realistic about that. Get it done by an outside third party, not your accounting firm.
That's a great point. I know some businesses that will do that every year and just they'll
Yep.
pick one item from that valuation to work on. Like that doesn't have to be a when you're thinking of selling moment. That could be you could do that right now.
Yes. Yep.
Yeah.
And
Well, I really appreciate your time today. I think I said it before, but if they would like to reach out to you, LinkedIn's probably the best way to find you, Jim Schultz. And I do want to do a small plug here for Vistage, the community that you came up through, right, as a member and then became a chair for. Maybe just spend a minute or two telling the audience about what Vistage did for you and why you think it was a great investment.
I wouldn't be here today if it wasn't for the members in my Vistage group and what Vistage did. It was a way to have peers and a way to have a coach hold a mirror up to yourself. Sometimes that's very difficult, but if you're really interested in growing and developing and you're a business owner, it's lonely and you really can't talk to your leadership team, your people at company. You can't always dump it on your spouse or your partner or a mentor or a friend. You know, Vistage is where those conversations happen, and you can be so open, so vulnerable, because no one's judging you. They're all unbiased, they're all objective, and they've all been in that seat. And I learned everything in that group in terms of very specific things that I did in my business and we were really intentional about to help actually the deal to actually happen. You know, I just tell people if you're a business owner, you have to be in some peer group, whatever the peer group is.
Right.
If you're trying to do it by yourself, that's a tough road to go.
It's the harder way to do it, right? It's almost like you buy progress with these groups just because of the accountability, the focus, the camaraderie, right? Great. Well, thank you very much for your time today, Jim. This was great. Appreciate you sharing your story.
You're welcome.
This is the 5-year exit with Beka Shea. Thanks for listening. And if you're interested in learning more about how we help CEOs and founders build great leadership teams that can work without them, go ahead and book a call with us. We'd love to talk more.